Hi there, Robert Wolf here with Terra Firma Business and Financial Consultants. As an asset coach and a tax strategist, my job is to come up with unique ways that are simple to help explain how things work in our life with our assets, with our taxes, with pretty much everything that surrounds us from a financial perspective. So this training is hopefully going to do that. Okay, so really quick, let's review what an asset coach and a tax strategist is. So basically, I teach you how to organize your assets to work more efficiently while receiving additional tax savings, which causes your assets to work even harder for you, so you can increase your cash flow without increasing unnecessary risk. So how do we go about doing that? Well, very simply, we have a system in place that will walk you through the entire process. We hold your hand. Now, what does the IRS tax? Exactly, income. Now, what creates income? Correct again, assets. Okay, so what we need to understand is how the assets work and how assets create income from the IRS's perspective. And if you're interested in more about this, go ahead and watch a few of my other videos that specifically talk about assets and income taxes. So now what we want to know is, what kind of income do you want? Well, you want taxable or tax-free. What kind of asset do you want then? You want something that's tax efficient. So everybody wants tax-free income. They just don't know how to get it. In fact, the interesting thing about the IRS is that the assets that are most tax efficient are actually the assets that are the most conservative as well. It's really interesting. But we want tax efficiency, so we got to look for that. So here's a way that I explain how the tax returns work. Okay, your 1040 tax return. So this is what I call an income funnel. And along the top, we have our income. So we may have wages, we have our 1099 income, we have K1 profits, and we have real estate income as well. Now, I also understand that on the same line, these fall on within the tax form, okay? But I wanted to separate them out because a lot of my clients are business owners and they have real estate. They also have some 1099 and they have wages. So this represents typical income of my clients. So in this guy's situation, he has $522,000 of income. Okay, so now what happens is that this income flows down the funnel and it summarizes on the personal tax return. Now, your personal tax return is the financial statement that the IRS uses to grade the financial well-being of you. You are an asset of theirs because you create income for them, right? Tax revenue. So they have these tax forms to figure out what your financial health is to them. Okay, so now what we got to do is we got to look at our formula. This is our tax savings formula. So the first number is the adjusted gross income, the 522. Now the second number, the 320,000, that's your lifestyle expenses. That's what you spend on a monthly basis, annual basis. Now when we subtract that from the AGI, that equals a 202,000. That's what we call non-lifestyle income. That's your extra money, your discretionary money, right? And if you're curious on what clients do with this discretionary money, go to my other video that talks about what an asset coach does. And it talks about what I call the asset wheel. Okay? Now, the idea here is we want to take this money and we want to shift it up the income funnel as deductions. Okay? So we have our business, 1099, K1, and real estate. We have 3 opportunities to create deductions here to offset our revenue flow. Okay, so how do we go about doing that? Well, you got to look at how the IRS looks at your income. So here's what the tax brackets look like: 10, 12, 22, 24, 32, 35, and 37% respectively. Now the income ranges are on the left side are the beginning income ranges, and on the right side are the ending. So what that means is that if we looked at the 12%, that means that any income between $19,050 and $77,400 is taxed at 12%. Okay? Anything above $77,400, you enter the 22% tax bracket. For any income between $77,400 and $165,000 is at 22, and so on and so forth. So if in my client's situation, he has $522,000. Okay, so he's at this green dotted line. So now when we shift up the other money, the $202,000, back up the income funnel, we create deductions. What actually happens is that his income starts to drop, which is fantastic because it's his taxable income. So it goes down to the 24% tax bracket. So imagine saving 13% taxes just from this tax bracket guideline. Now, there's obviously more involved in this. This is just a high-level explanation, but hopefully it gives you a visual of how the tax savings works. That when you save dollars on deductions today, it affects the last dollar. It affects the big dollar on the top, and it flows down the funnel. Okay, so hopefully this was helpful for you. Once again, my name is Robert Wolf. I'm an asset coach and a tax strategist. Thank you so much.